How are we getting on, people? Luke here from LAGFX. We are back today with a new Sunday sessions video. This is where we choose a few pairs that hold good potential for the coming week, and we break down some of the analysis we have performed to give you guys a better understanding on how we are looking at tackling these markets. Now, should you have any questions with regards to the analysis I go through today, please leave them in the comments below. And if you do go on to enjoy this video, don't forget to share it with your friends and leave it a like. Now, there's three pairs that I have good focus on for the coming week. The first one is the Euro US dollar, and this is the market that we have on screen here. So we can see that price has been trading us in a bullish way, providing us with bullish structure, higher highs and higher lows. And we have no suggestion or nothing to suggest, should I say, that this is going to slow down. We ought to be looking to buy into this market to follow the current trend. And you can see here, as we go to the higher time frames, we still have key points of bullish structure. Higher highs and higher lows. So we want to see a continuation in this. Now, the fact that the higher time frame structure and the lower time frame structure correlate with one another gives us the additional confidence needed. We've seen that price is traded down and into this higher time frame order block, giving us this bullish structure that we're seeing at present. So we just simply want to get involved in this current bullish trend. On the latter end of last week, I did provide my clients with some analysis that I wanted to see price actually correct itself, trading down and into this area of interest. This right here that I've got marked out is a hidden order block. So there are orders here that need to be liquidated, removed from the market and introduced, ultimately giving us more demand to continue this push to the upside. So I have got this area marked out as an area of interest. Price could come down to trade lower down at this point here. However, I feel it's quite unlikely, just with how strong the demand is in the market at the moment. So as we head to the 4-hour timeframes, what we want to see is for price to trade down and into this area to clear those orders, break structure fractally to the upside. That gives us the confluence we need to enter in on long positions, and that's when we look to take part. So we may see bearish structure like this trading down and into the zone. Then we want to see price break structure to the upside and then continue that bullish structure. The break of structure would be here, as this is the last high that created the lowest low, trading into the zone. So price to trade above this high would be a break in structure. So this would be our BOS. Then we'd simply want to look for an area of interest within the impulsive wave. So this to this being the impulsive wave that broke the structure, to find a fractal area to get involved in. So we'd look at this area, we'd find another area of interest, a fractal one, wait for price to pull back down into it, and that's where we'd be looking to get involved in this market, in those long positions. Our entry confirmation, confluence, and our strategy itself is quite simple. We literally look at the order flow of a market, the supply and demand balance, and the structural laws of a market. That's all we do. Any strategy should be as simplistic as possible, because when you're adding indicators and all these other laws and logics, what you're doing is confusing yourself and overcomplicating things. Things don't need to be complicated. Everything in this world is run by supply and demand. The supply for something or the demand for something. And the same applies for currencies. Now, it's just convenient that we are able to distinguish key areas of supply and demand by the characteristics of candles. Now, with our understanding of this, we are able to manipulate and take advantage of the market because we understand where key reversal points in a market may be. All we do is we wait for confirmation of those reversals via breaks of structure. Because as we know, the structural laws of our market for bullish structure are higher highs and higher lows. For bearish structure, it's lower lows and lower highs. So when we see reversals in these characteristics or changes in these characteristics, we have the understanding that enough supply or enough demand has been introduced to give us a flip in the balance. So as I say, I just want to see price pull back down into this area of demand, introduce demand, offload supply. We get involved and we profit. It's as simple as that. So I've set my alert and I'll be keeping my eye on this market over the course of the next week or so. Heading over to the Great British Pound to the Japanese yen. Again, this is a market that is extremely bullish. Just looking at the fundamentals of these two currencies, the Great British Pound is considered a major currency, second to best from the US dollar. And then when we look at the Japanese yen, that is a currency that is quite weak, and to be completely honest with you, is only getting weaker. So based on that and the fundamentals of these two currencies, we understand that this market is predominantly going to be bullish, and the prevailing trend for this market should be a bullish one. We head to the weekly timeframes, you can see that we have confirmation of that. This market is extremely bullish and has been for a very, very long time. Now looking here now more at present data, what we have seen is price, yes, range, and we have seen price consolidate, but this isn't just a consolidation. I feel this is an accumulation before a big push to the upside. So as we head down and we look at the 1 and the 4 hour time frames, we can really refine where we are looking to get involved from. I mean, looking here at this impulsive wave within the higher time frame correction, I would consider this or these here as the last protected highs. Why? Because these highs created the lowest low, right? So this would be considered a break in structure or a change in character, whatever you want to call it. So now that that's happened, we follow those same laws. We look at the impulsive wave that broke the structure, which is this one here, and we look for areas of interest. We have a clear order block sat, waiting to be liquidated. So I believe now that we are going to see price trade down, clear any remaining orders before a continuation to the upside in what will be the new impulsive wave taking this market higher. This right here is an impulsive wave within the correction of the higher time frame structure. This right here would be the impulsive wave of the new higher time frame impulsive wave. So it's important to distinguish different time frames and the structure within structure. I'm simply wanting to see price pull back down and into this area of interest, give us our confirmation we need, fractal breaks in structure on the lower time frames, and that's when we'll be looking to take part in this market. So again, I have my alerts set and I'll be waiting patiently for price to deliver the confirmation we need. Finally, heading over to the Great British Pound to the US dollar. This is a market that I believe is going to trade us in a bearish way. Yes, it contradicts our analysis with the Euro US dollar as we want to see weakness in the US dollar. However, we want to see strength in the US dollar with this pair, just because we want to see weakness in the Great British Pound. Now, as I say, yes, it contradicts our analysis for the Euro US dollar, but it doesn't mean to say that our analysis is wrong. At the end of the day, the Euro and the Great British Pound are two completely separate currencies, and the US dollar can be strong against one and weak against another. This all falls in line with fundamentals. Now, you'll notice I have two areas marked out, two areas of supply. Price has absorbed one of them, continued to trade in a bullish way. We've just seen price clear this fair value gap and begin a new impulsive wave within what looks to be a higher time frame correction. My target is this here. I want to see price come to clear this area of inefficiency. Once it's done that, that's when we can look to get involved in this market in those short positions. Now, the reason why I believe this market is trading us short longer term is because we had an impulsive wave trading us higher. I'd consider these as the last protected lows within the bullish structure. Price has come to clear those, trade beneath them and break them. So that suggests that we may have bearishness being introduced. Now, I could be completely wrong with this analysis because as you can see here, we have a low set followed by a high. This could be the higher low, and what could follow would be a higher high, right? And as you'll see, we are following the laws of bullish structure. So it's important to not get manipulated and caught out on the higher time frame scope of things, which is why we will be waiting for the confluence and confirmation we need in order to take this market short. Because if we look closely here and we go down to the 1 hour time frames, you'll see that price has just come to clear these orders here. We mark this out. Price has just come to clear these orders. So this may well be the next impulsive wave trading us higher. But what I will be doing, as it's too late to get involved in any buy positions from this area here, is I'll be waiting to see if price absorbs this area, continues to trade higher, or we see a distribution take place and we take part in a short position. It's very important, as I say, to wait for the confirmation we need before we get involved. A preemptive trader may look to take this market short, and what may happen is we see price, we may set up a position like this, for example. We may see price trade up and into this area like so. Price then begins to trade lower, clears orders from this area here, might trade down, clearing orders here, and then take us straight back up and continue trading higher. We've then been manipulated out of the market. So that's why it's important that we wait for the confirmation we need. And as we know, that is a fractal break of structure to the downside. So we want to see price trade in, enough supply to be introduced, that to break structure to the downside, pull back up to set a lower high, and then we get involved. That would be our break. Price pulls back into a fractal area of supply. This is where we enter. Not only do we get involved with a more refined entry, something like this. But we also have confirmation that the market is ready to go short. Now again, I am going to set an alert at this point and wait patiently for price to play into our hands. But that's my analysis for this Sunday sessions video. I know I've only gone over 3 pairs. I usually go over more, but those are the 3 pairs that I have key interest in right now, and 3 pairs that I feel we can really take advantage of this coming week. If you haven't done already, go ahead and watch my XRP video. Price is playing out just as predicted, which is lovely to see. I'm expecting some big things with XRP over the course of the next 6 to 12 months. And if you want any more analysis from me, then just leave some suggestions in the comments below. Now on Monday, the 14th of April, I will be uploading a case study video on the NASDAQ for those who are interested in that pair. So make sure you keep your eye out for that one, as that will be a good watch. I think the NASDAQ has some brilliant prospects, some great trades that we can look to take advantage of. But as I say, that is going to summarize this Sunday sessions video. I hope you guys have enjoyed. If you have done, don't forget to leave it a thumbs up. Now I just want to thank you all for watching, and I'll catch you all in the next Sunday sessions video.